I've been accused of being a slumlord, so I don't even really know. I don't even really know how to define that, I guess. And has that word ever come up to you? And what does that mean? And how do you kind of take the emotion out of that?
I don't own houses in war zones. All
Okay.
right, that's number
Well,
one.
let's define that
Okay.
too, if you don't mind. And I don't want you to lose your thought
No, no,
either.
no. That's fine. But you might have to bring me back. In A war zone to me is a place where you're just not comfortable going, especially at night. If you need to go check out something in your house, you just don't feel safe.
Yeah.
And those areas are fairly well known here where I
Sure.
live. I'm buying houses where people that are my age that were born and raised here, this is where they grew up. And the neighborhood's turned. They all moved out to the suburbs and bought 3 2s or 4 2s or whatever. But these are typically little 3 1s, sometimes 2 1s, sometimes three 1.5
Mm-hmm.
baths, small homes,
Mm-hmm.
about 1,100 square feet. I've even had some that were, I had, I've got like 3 2 1s that are 672 square feet. Very, very small,
Gosh. Wow.
very small, like an apartment, really.
Yeah.
Um, but yeah, that's
Yeah, but going back to the slumlord, I guess, phrase that's definitely gets thrown. Or I guess when people like go in and they see like a house or see how people live, they're like, oh, that must be just a
yeah.
slumlord. Well, it's like, well, this isn't how it was
I've
when.
looked at some that were being presented to me from other investors wanting
Mm-hmm.
me to buy them. The floors are like this.
Mm-hmm.
You can't open the closets or the interior doors because the floor bounces up. Um, they're slumlords, in my opinion. My houses, everything's level. There's air conditioning, there's heating in the winter, the roofs never leak. We have security doors, on all the doors. They're nice homes. There's a nice place to live.
Mm-hmm.
Um, the area may not be as safe as where I live, but I mean, I certainly don't consider myself a slumlord. Would never want to be considered that.
For sure.
But I know what you're speaking of.
Yeah.
There is more money in that, interestingly enough.
In being going to
Yeah,
the real low end, going to the
yeah,
war zone type of
really is. If
areas.
you're tough enough to do it, and you got a property manager or you're willing to manage it yourself, because you can pick up the property so much cheaper. As far as, and these people, a lot of the people that live in these places, it gets roach infested.
Mm.
They won't call you and say, hey, somebody needs to spray here. They'll just live with them. And so I don't want to have anything to do with that. But the people that do really make more money if you're willing to get into that.
Yeah.
It's just it's just the way it goes. And the higher you go, the less money there is in it. Now,
From a cash flow standpoint.
yes, it may. I was going just that's where I was going. Over time, because of the buildup of capital, it may be a better thing. You certainly are going to end up with a much nicer asset,
Right.
one that's worth a lot more.
And I guess some of the benefits to having more of the higher end is like if I have a lower end property, who am I going to sell it to? Really, just probably another investor on the real low end.
Right.
On the higher end, I guess I got with a single family residence, I've got more options. It's
True.
it's more marketable. What's the downside? Is it just the immediate cash flow? What's the downside to having a higher end type of property?
Well, to get it rent ready initially is going to cost you a little bit more. The return itself, the cash on cash return, is just not all that substantial. I mean, you're probably looking at, to get a good deal, you'd be looking at 10 to 12%. Whereas if you go into buy a pretty nice 3 1.5 somewhere, I mean, I usually get returns somewhere between 22 and 32%,
Yeah.
somewhere in that range, and I've gotten them as good as 65%.
And that's buying cash.
Correct.
Yeah.
Correct.
Because you can always do better if you're negotiating directly with a seller.
I have my favorite way to buy is with seller financing.
Okay, let's talk.
That's
I want to talk about that. Yeah.
okay. So that's number one. And then, but I had a number of homes that I had private loans on through private lenders. Never used hard money lenders, didn't need to. I found plenty of private lenders. So I had some leveraged, but there's really no money in rental if the house is leveraged. You know, you're waiting on it to pay off before it's really doing well for you. The way you look at that is your tenant is paying that house off.
Right.
And I've heard that from multiple landlords.
Right.
Is there's no money in rental when it's leveraged, while it's leveraged.
And I've heard that too. And then there's the other camp that would say, right, there's no immediate cash flow because even the 100, 200, 300 you might think you're getting, it's really over time, you're going to put that back into the property.
True.
But I guess the other side of the argument there is, well, it's going to appreciate. So in 5 years and 10 years, I can refinance and I can pull more money out.
Right.
And then keep kicking that can down the road, refi till you die. There is that camp, but that in your experience, it's you want them paid off.
That refi deal, which, I mean, you go all the way back to Nothing Down with Robert Allen, you know, a real famous book. I don't know whatever happened to him. He probably went bankrupt. To me, that's a formula for disaster.
He's still out there?
Is he?
Yeah. Oh, yeah.
So, I mean, if you're continually refinancing your house, boy, get ready. I mean, I just don't agree with that. I don't like being that fully leveraged at all. I don't mind being leveraged if it makes sense, but that's pretty crazy.
Yeah.
And you know, who's the financial guy? Dave
Ramsey.
Dave Ramsey. You know, he went bankrupt doing that. So he's not a dumb guy.
Yeah.
You know, I just think that's a dumb formula. And I'm sure we both have friends that are doing that right now.
I don't think there's any doubt. Well, there's you know, with YouTube and with the seminar, like, there's so much information out there, and no one is wrong when they're sharing their experience. They're not wrong. Like, if they had a really great experience doing that way and they want to talk about it and share with it, they might not necessarily be wrong, and you're not obviously necessarily wrong. You could both end up at the same place. But I guess what I hear you saying is it seems like it's a little riskier to go that route.
It's a whole lot riskier. Yeah. And I mean, you really need to have some background in accounting or finance to pull that off. It's pretty dangerous. A lot of people don't realize if you're renting a house for $1,000, 400 of that rent will go back into that house. It may not be this year or next year, but sooner or later it's going to need a roof, an HVAC system, an upgrade in electrical, a tree's going to fall on it or something. You're going to spend about 40% of your gross rent on that house. Management, taxes, insurance, and upkeep.
Yeah. At minimum 40%.
Yeah.
Yeah.
Yeah. So that's the way I look at it.
And that's without a debt component. But
now you are getting, when I say 40%, you're getting a tax benefit, you're getting depreciation. And, you know, of course, everything you buy, you write off.
Right.
So, but people that think they're cash flowing 100 or 200 bucks, especially after they're paying off a loan or something like that,
yeah,
they're probably in the red on that house. They just don't know it yet.
Right.